All right. Honestly, good morning, good afternoon, and good evening. Um, this is Doc from North America. It's TGIF. It's thank goodness it's Friday, and we're really glad we'll be doing our radio show on Saturday. That's always fun. And we have the Dukascopy calendar up there, kind of moving towards that. It's well worth looking at. We got building permits here in the states right now. Housing starts. We've got the Fed. We got somebody an hour from now, right at the end of the webinar, at the beginning of the New York Open. Bostic is speaking, and then after that, a half hour later, there's Kashkari, which he's a trader, a former trader, and they have these all listed as medium. And see that right there, medium effects on the market. Without a doubt, they will be. And then Bostic speaks again at 12:30, and then got some the oil rig thing comes out at 1 o'clock, and a monthly budget statement by 2 o'clock. There's some action into the marketplace here, and then they got all the CFTC stuff pouring out at the end of the day. So what is it? What do they call that? Where's it at? Let's put it up there. It's they give you the positions, net positions on the currencies, Aussie and Euro and Yen and cable and gold and oil. So they consider those low. But that's it's always well worth taking a peek at. Let's check out. There's Netflix. That's showing you after the at the close. My old system shows us. Let me just show you what Netflix does. It show it on there? I think I have it on there. Yeah, Netflix is up. It didn't go into the sell. It closed in a buy when looking at after the news last night. So, and it's in the weekly buy. So just a little forewarning there for those who are watching the spreadsheet. Let's jump over to where do we go from here? Let's take a look at. Oh, I know what I was looking at. It was fascinating. Check this out. The 10-year, the 30-year bond. They're making new lows again. The bond vigilantes have the pitchforks and the torches, and they're chasing after the Federal Reserve. I love it. Chase after them. And here you'll see it right there. And you can see we'll go right off with the first, the chart itself. Yesterday, at the end of the day, they slammed it down. And now it's trying to go after that low here today. We'll see if it breaks the low. If it breaks that low, it's broken that low, and it's broken that low. You can say it's broke that low. In other words, the higher lows have stopped. We're all the way out to August now. We've taken out those lows. Now the bigger question is, do we take out the July lows? Good question. No answer. The only answer Doc always has is the same one that he always has, and that is honestly. I saw a money manager on TV this morning. He must have said honestly like 9 times in 2 minutes. I was like, oh my God, someone's got to remind this guy to stop using a word like that. Honestly, the idea right now is that the only our math will tell us the true story. And when we go and we look at it, in the full picture, you can see here we're in a weekly sell for 4 weeks. So that is the end of. Let's give this a resync. Here comes the resync. We'll take a look at it, and it shows us that it went into the weekly sell of the week of the 27th, and that is September 27th. September 27th? Yes, September 27th. So probably right around here. Right in here where all this red is. That week it went into the weekly sell. And it was trading in the 125 area. And now we see lows of 119. So 6 points lower. Or in this case here, it's 6 times 32. 108. 6 times 32. Because they do it in 30 seconds. They measure the bond. They actually do 64 also. So that is really wild. And we've seen how this thing has dropped down from 125 down to 119, and that's a lot, in bond wise. And so what they've done is they've taken away the half a percent cut. That's what they really have done, is they've taken away the 0.5% cut by the Fed. So another example of what. Hey, JI, what instrument is this? Oh, this is Chicago Quant Technologies. Let's see. We've been doing the webinar with Ducoscopy now for over a decade. That's who we are. And what we do is, between Robin and I, we talk about the markets, about, since both of us put together have over almost 100 years of experience. We both have been traders for over 50. Robin's been trader for like 51 years. I'm like 47 years. So hi. Yeah, so we talk about the markets. We use Ducoscopy's information to talk about the economic economic numbers that are coming out all the time, and we co-blend it with. We used to do it with J4X. We invented an index for them, and we do things like that. We look at fundamentals in a realistic way, and at the same time, everything leads us through our algorithm over the last 50 years. We follow our algorithm, and it gives us a good solid direction on a daily and weekly. And we have intraday. We can even show you down to the intraday level, but we don't project it much more than just use it personally. We used to have a camera on it for people trading the I want to say the Deutschmark, the euro. So you could see the euro trading on an intraday basis and following our mathematics. But what we're looking at generally is daily and weeklies. We're option traders, and we provide information for producers and so forth. So in other words, they're trying to be in the right trend all the time, be it commodities, like grains, wheat, soybeans, so forth, or metals for miners, and then at the same time we provide the same thing with stocks and so forth, or bonds. In this case here, when the Federal Reserve cut the 0.5 percentage point, we knew we were going to see a quarter for sure at that point, because there was such desperation politically to do it. But then what we did is we went from that to watching the bond vigilantes. That's what the Fed likes to call them, bond vigilantes. And we show you that the bond vigilantes basically take control of the markets more than the Fed does at any given time. Oh, I see. Found your channel and thought to stop by. Nice work. You do. Thank you very much. I appreciate the compliment. Thank you. We're always here having fun, talking about the markets. I guess the higher accuracy rate makes it fun. That's probably what it comes down to. And since we're derivative traders, be it the futures or the options and so forth, combine them together, what happens is that we look at the currencies, and we look at the individual pairs trades, and we look at the generality. In this case here, we're starting off with the bonds today solely because the 30-year bond is showing us that they're pouncing on it. This is our own platform. We provide that, and if you're interested in using the platform for a couple weeks for free, just contact Robin and he'll set you up. But you can see here, this here was a real punch into it again. They were starting to bottom it. We didn't really trust it solely because you can see here our weekly algorithm's been in a weekly sell now all the way back into the closing week of the September 27th. So we knew that there was weakness in there, and it was all, as we like to do, make a sound. We go dead cat bounce. And so it's more of a dead cat bounce that we were seeing, the product bounce up. Here's our daily algorithm right here. And we saw that it didn't have much meaning since we were in a weekly sell. You're only protecting your upside risk, not getting long, unless you're using like a binary or an option, something that you have a fixed risk level to begin with. But you can see over since, what's that right there, since September 18th, we've been pretty much in a sell. Something like, right there is 6, 7, 8, 9, 10. And then, is that a 10 right there? Yeah, it's a 10. And so then there's 10 days in a sell, then 2 days in a buy, then back into another 10 days in a sell, and then a couple days in a buy. Now we've been in the sell for, you can see it right there. Plot 1 says minus 0.02. Below the zero line tells us if it's a plus or a minus, long or short. So, you can see that overall it's a dead cat bounce, because we see we're in the weekly sell all the way over here for 4 weeks. And you can see the daily sell right there. And in the dots, confirmed numbers. So in other words, if you're getting, if you got like a green dot and an up bar, it's telling you that there's strength coming in. And then when you get the red, dot and you're breaking down, you know that it's breaking down. And, it's kind of like, a little confirmation. Sometimes you'll get a green dot in a negative situation. I'm sure we have one I think right around in here somewhere. And, it's kind of, very solid, very formal, very coherent. Laugh out loud, the DC bounce. Thought it was a real cat for a second. Yeah, I'm a cat person. I like cat sounds. But we deal with cats in quantum mechanics, with Schrodinger, his warning back in the Copenhagen conjecture. And, the cats that are alive, he was basically warning us that quantum mechanics is not a very complete science. And on the trading floors at the exchanges, we use the same concept, since we use delta and gamma and so forth. We look at it and we go, okay, this is a dead cat bounce. In other words, the cat has fallen out of a window, hit the ground, and bounced mainly because of the inertia of it itself, hitting the opposite direction in a sense, hitting Earth, falling down and bouncing. And the bounce might be that the cat is dead, or the cat might be alive, but in the end result, we know that it's a bounce mainly because of the way it fell. So, in other words, the idea that it fell. So we have a lot of old floor expressions we use around here, because Robin and I both were floor traders for very many years. So at the same time, we have a fun time at it. Okay. So, if you would like to see anything, we can throw it up on the screen for you. We're not monolithic. We're always willing to take a look at things. And let's go to look at the dollar index. Since, we've seen... Where's the dollar index? Let's put it up there. The dollar has been showing us that they're buying. They keep on buying and buying and buying, the dollar, because interest rates keep on going higher, higher, and higher in the United States, or stay high, and outside the United States they're lowering them. So we've been in like a daily buy all the way back September 25th, and you can see our algorithms, giving you confirmation off and on. Matter of fact, there's the 25th. It went into a buy, and then when it went minus, it was a green dot there. Here's a good example. It was a green dot there on it, so it didn't push it into the sell. We need both a green dot and a positive. And so when it goes negative on the algorithm and positive on the dot, it still keeps you in that buy. And then the next day again, it's back up. Next day again, it drops underneath. It shows you that, kind of confusion or oscillation. It's telling us to stay long throughout this whole event. At the same time, you can see here the weekly buy of the 10th. It goes into, let's see, September 10th. Where is it at? September 10th? Yeah, September 10th. There's October 10th. I'm sorry, October 10th. Yeah, and the ending of that week. I'm sorry, October 4th. October 4th. And so you can see the strength has been in there, just throughout this whole move here, the buying system itself. Gold at ATH, drop here or more up? Any thoughts? Gold. Lately I've been. My opinion on gold in particular, let me put gold up on the screen for you too at the same time. Here is the December contract. Really got a feeling that in my head, the math tells us, it's going up. It's been in a weekly buy for a long while here. You can see here, it went into the weekly buy back in, let's give this a refresh. And we have a spreadsheet up on the screen there. You can see every day we put out this spreadsheet showing the tracking the rate, our record, I guess you could say, what the accuracy rate is and so forth. And you can see 15 weeks in a weekly buy and 5 days in a daily buy. All right, so we've been in a buy basically all the way back into July, the end of July, beginning of August. So, without a doubt, the algorithms are telling us to be long. Okay, and I think more than anything else is that the strength we've seen is because of the hope that interest rates are dropping. But in my mind, as a trader, which could be half wrong and half right, not algorithmically, proof, just my opinion, wouldn't surprise me if they sell the metals off if Mr. Trump wins. I'm thinking that, we may see a little weakness in the metals complex if Mr. Trump wins, and I think he's going to win. So I'm basically thinking personally, the markets are going to start to back off. And I was looking. One of the reasons why I thought that was this. I looked at the Philadelphia gold and silver stock index. It's been around a long time, and it's outperforming. Here it is, right there. It's outperforming the gold and silver itself. It's outperformed it percentage-wise for like 6 months now, and usually that can be a sign that we're coming to the top of a metals rally. And so that's why I'm thinking that we could, with Mr. Trump winning the election, we could see a little sell-off in the metals market. At the same time, I was questioning myself. I was, saying, "Self, what do you think about Bitcoin?" In other words, what will it do to Bitcoin? Because the cryptos are a legitimate asset class. They're an odd asset class, but they are a legitimate one. I know that people say it's built on nothing, it's pyramided. They used to say that about gold and silver at the same time. They used to say that for decades. Traders would be, and they would say that about options, and they would say it about everything. So it automatically legitimizes crypto assets, because they use the same excuse why you should hate them. So I'm looking for it right there. Here it is, right there. There's the Bitcoin futures contract. And you can see the thing has been in a buy. Something I think yesterday we were looking at it and talking about it, and it's been in a buy in this case here for 5 weeks now. From the let me just refresh that, and so it's a alternative. Remember, traders on the floor, and in yesteryear, I guess you could call it, had a very grounded point of view. In other words, we were at the access point of all trading. We saw the buyers coming in. We saw the sellers coming in. We knew who a lot of the buyers were. We knew who the sellers were. If it was Ivan Boesky or if it was Goldman Sachs, we knew they were buying, okay, or Shearson. We had a general idea of who was doing the buying, okay? And you could tell, how their recommendations were, to the retail. So you had a general idea if they were buying it or they were, hedging themselves and so forth. So when you look at cryptos are like the old way they looked at gold and silver, and it was a hedge, for disaster. And now we have a more sophisticated electronic hedge against central banks. Now, obviously, if the central banks were all wiped out, gold would probably be the number one, silver would be number two. The cryptos, not sure if they would survive or not. It depends on how the central banks would be wiped out. Would be a natural disaster, from the sun, blowing up the grid, or is it just coherent populations start to realize that the central banks have been more of a disaster? Remember, they were created. Central banks, to a great extent, were created to stop recessions and inflation and all that, and it hasn't done anything. So, it's bankrupt the world in many different ways. So, cryptos are an interesting asset, and they kind of tell a different story. And I'm always trying to understand what that story might be. And I'm not totally competent if I have it always right or not. But we know one thing for sure, and that is it shows you the nerve or the frustration, that raw nerve of what people think about central banks and government, and so we pay attention to it on that aspect of it. Excuse me. Whereas before, money managers would buy 3% gold in their portfolio. When inflation kicked up, they'd put 5% of gold in their portfolio. So in other words, it wasn't, and there were some gold funds and so forth and silver funds, but overall it was more of a hedge against inflation. Then they legalized listed options basically at the end of 1975, and so over the summer months there. And so when they did that, it opened the doorway for money managers to be able to hedge themselves. Money manager previously to that point would have to, if they owned IBM or General Motors or Royal Dutch Shell or British Aerospace, and inflation was kicking up, they would sell those stocks because they needed to hedge themselves to a downturn in the economy. Now that you had options, they could just go sell the calls, buy the puts, and they put a collar around their asset. And so they could still collect the dividend and at the same time be hedged. If the economy dropped hard, they still had the assets in a option. So in other words, if the stock fell from 100 to 70, the put made like 28. So you basically had 98 now instead of the stock trading at 70. And you could take that 28 and go a dollar cost average back into the stock if you really loved it that much. So we use a couple different tools here that are, let's say, products: Bitcoin, gold, silver, the dollar index, the individual pairs trades. Once in a while, we look at the bonds. Bonds are making a little more noise the last couple of days, because of it. And bonds obviously influence marketplaces or market products because of the interest rate carry. So I hope I'm not getting too deep in the weeds, and I hope I gave you a flavor of what we do around here. Alrighty. And so that's why I think gold in the end, because the gold stocks are out. Oh, there's Chicago. Let's see what happened there. Ms. Yo, Robin, what's happening?
Can you send me the link for today?
Sure.
I cannot find it.
No problem.
The phone was down. I finally got it to work again.
No problem. Bye-bye. Okay. No wonder we didn't see Robin up there this morning. All right. So, yeah, that's where we kind of stand at the moment, is that the gold stocks and the silver stocks are companies themselves are outperforming. And because they're outperforming, I'm thinking that, maybe it's the top of a market here. That's what I'm thinking. And it's just like when you look at the gold-silver pairs trade, that type of thing, and the ratio. In this case here, I believe that that might be trying to tell us that the markets might, if Mr. Trump wins, then the next thing you might see is, they may take some profits. And that would make sense because I think the metal stocks themselves, the companies like Newmont Mining and so forth, are overextended. I think that's what it comes down to. I hope that made some sense. I hope I made some sense. All right. Let's see. Let me send this over to Robin so he can jump into the conversation. There we are. All righty. So from there, yeah. Oh, no problem. Glad to do it. I always enjoy it. It's fun. All right. So from there, let's jump over to. Let's see. We got done with Let's go take a look at the individual pairs trades. We'll go over to the euro now and take a peek at the euro. We'll go to the old platform and look at it. And it has, if you're, that's pretty much the name of the game. What is that? There we are. All right, let's go over to here. There we go. So you can see here's the euro, and you can see it blowing down right there. You can see it's been in the daily sell since right here. Been in a weekly sell up in there too. A lot of pressure on it. You can see it on our spreadsheet right there. You can see that 3 weeks in a sell. This is going on a fourth week now with no problem, and 12 days in a daily sell. So 3 weeks Now it's basically 4 weeks in a sell and 12 days and basically 13 days now. And I have to, I believe, because ECB yesterday cut the rate. The week before that, the Exchequer in London cut the rate. And so in the United States, our bond traders are taking the rates up. In other words, one is Europe is taking it down, and the United States, the traders themselves, be it domestically or globally, are raising rates at the same time. And the central bank here can't do anything about it. No matter how hard they try, the Federal Reserve is losing that battle. You got to imagine right here, they cut the interest rate a half a percentage point, the official interest rate. And here, and you can see it on the bond. Let's see, let's go back over to the bond again. Not there, right there. You can see the bond, yeah, it's right there. That's the bond. So you can see right here, it's been gliding down. It didn't work. Whatever they thought they were doing, if they'd have done a quarter point, maybe the bonds wouldn't have been so, they may have not beaten them up as much. But what they're probably trying to tell us, and they usually are accurate, and that is that they think that this is increasing inflation. So they have to discount, they have to put a haircut into the bond price itself. And so what they've done is they've taken away what the Fed gave. Because they're saying you've just instigated inflation to kick up more again. And we can see it in all the stats over the last 6 weeks. Matter of fact, there was a great speculation. The day they cut interest rates a half a percentage point, people were saying they should have just done a quarter, if at all. And then the next day, data came out and it said, wow, if they had known that data, would they have done it? And we all know the Fed knows what the data is days ahead of time. And when they know days ahead of time, that means they did it for political reasons. And that's what's freaking out the bond traders, is they're saying they're not following the fundamentals, and what they're doing is they're just doing it for political reasons. And that's the disturbance there. So they're punishing them. They've taken out the ruler and they're smacking their knuckles. So the Fed's knuckles are being smacked. So from there, let's go back to the currencies, and we'll go take a look at cable. And there's cable. Cable jumped into a buy one. It was in a sell for, I don't know, 10 days. It was at 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days it was in a sell for this glide down. And it started to try to perk up. We had a green and a red. You can see that's usually a sign of 2 days away from some real volatility. It's a good straddle point usually. And sure enough, they slammed it like most of the time they do that. It's about an 85 out of 100% accuracy rate. It's interesting. And then you can see they pushed it right back into the sell, but it's not holding up very well, that sell. But we're in a weekly sell, so you can't play the long side. The only things you can do is sell side. And so you can see it barely gave you a profit. Barely. Look at that. Just a little bit low, 129.74 versus the day before of a settlement of 129.90. So it was only 16 pips of a profit. So it all comes down to how you do a trade. What you do a trade with stops or options or binaries, whatever. It's a certain vehicle that gives you more access or less access, more risk and less risk. So from there we jump over to the Swiss, what we call the inflation fighters, and you can see that's been on an uptrend for a while now, which means when the dollar Swiss pairs trade is rising, it means that it's losing money against the dollar. And obviously the reverse in the United States, the way we watch it as a Swiss dollar pairs trade. So obviously when it's going down, it's the opposite of that. You can see 3 weeks now in a weekly buy. And, it's been, obviously it's higher here than it is there when we went into the weekly buy. So that pressure is on the product as we speak. And then from there, we jump over to the yen. And the yen has been doing that same thing. It's hanging around that 50 area, just not willing to penetrate it, which is fine with me. You can see the same thing, 3 weeks in a buy. And you can see here this product is also battling it out since the daily buy right there. And what did we get? We got a green and a red, and within a day, it was really running, and the next 2 days it was even running more. So has a habit of creating that vortex, and it's a combination of volatility and our mathematics combined together, integrated together, I guess you could say. What's that? I posted something this morning on physics. What was it? It was quantum connectivity. Let me just go take a look at something. Because I think that word might fit into the way it's acting with the vortex. We use a combination of physics and trading experience, I guess you could say. Yeah, I'll tell you in a second. Oh, I know it is right there. Okay, there it is. There it is. Yeah, quantum connectivity. Is it connectivity? I'm sorry. Quantum contextuality. It's the same thing. It's not the same thing, but contextuality is like the surface of something. You touch it, grab a banana that's peeled. That surface is different than, say, a mango. Totally. They're both slimy, but one is really hard, one is very soft. You can push your fingers right through a banana, whereas that the pit in the mango is extremely hard. So contextuality, and I was passing something along in physics. I do physics and I do markets. I do it all. Do all kinds of. I'm a farmer. I do it all. All right. So from there, we go over to. There's the yen. So let's go take a look at the great experiment. That is the Turkish lira. Let's see. Oh, what do we got here? Oh, cool. I'm glad you're into it. I like that. Thank you. I find myself very funny too. I laugh at myself all the time. There's the euro against the Turkish lira. We call that the great experiment because there's not many industrialized nations in the world as big as Turkey that would have a currency that in the last 8 or 9 years has gone from 1 to 37.22 as we speak. It's an awful damaging experiment they're pulling. Whatever the former prime minister, now president of Turkey, whatever they've got in the back of their head about economics, basically I think they should rethink it. When your currency goes from 1 to 37, definitely something is wrong, It's got that Wehrmark, is it? The old German before Wehrmark, where they're putting money in wheelbarrows to buy loaves of bread, It's like, imagine you walked into a store 8-9 years ago and you hand them a Turkish lira for a loaf of bread. Now you have to hand them 37 Turkish lira for a loaf of bread. So whatever the government is thinking about economics, it's obviously an experiment that is gone definitely awry. And I'm not playing it's not a pun on bread. Awry? Rye bread. All right. Yes. So there is the Turkish lira. Now what we do on the currencies, if no one's asking to see anything, what we do is we run over to the South African rand. Because of the metals, their economy is based partially on that metal, especially since Nelson Mandela got control of the place. It's really turned into just a one trick pony. Unfortunately, they've really beat capitalism up. They've really destroyed the economy down there. And back in the days before he was president, the currency was in the 2s and the 3s and the 4s. Now it's in the 17s, 18s, and 19s. So obviously, the ANC has not done South Africa much of a favor. But we noticed there's a pattern over the years, and that is when the South African rand is gaining against the dollar, we notice that the metals go up in value. And when it's losing against the dollar, like right here, this pattern right here, that's rising against the dollar is a loss for the South African rand. Usually metals go down. And so when it's going down like that, the rand, it's gaining against the dollar. And usually gold is going up in price. And right here, this is telling us that it wants to go down in price. Now, it was doing that up until 5 days ago. And let's put gold up on the screen here. We'll use it on this screen right there. There it is right there. Right there. There we go. And so what you see here is it was doing that. It was going down, and then out of nowhere, about 2, 4, this is the 6th day now. We've been in the daily buy since right here. It's been a sloppy buy, but a buy. You can see, 15 weeks in the buy, as we talked about a little while ago when I was talking about the gold stocks versus the metals itself. You can see it's been climbing, and I'm not sure if that's a flight to safety, because what's curious is we're seeing oil stocks drop, and we're seeing oil drop. And so they're really reaching for the metals again. And that's all-time highs right there, basically. And you can see the same thing in silver, like so, except for the all-time high. I mean, silver's all-time high is like 55, 56, and it's trading at 32. So obviously they're doing a lot of pairs trading, and you can see it in the spread between the gold and the silver. And you see that pairs trade, that very clear change in combination, number-wise. So, I'm not sure what the issue is there, why they're reaching for it. I think it's a blow-off top myself because of the way the gold stocks themselves are acting, and the silver companies and the gold manufacturing companies, or mining companies. I think it's a blow-off top. So we'll see how they do here. We get into a weekly sell and a daily sell. We'll be, obviously I'll feel more vindicated of that opinion. And if not, then I'm wrong, and it's documented here where you can see many of our webinars, how much more right we are than wrong. But, broken clock is right twice a day. What else can you say? All right, and so then we go over to copper, which caught my eye this morning a little bit more than usual, solely because of the strength we're seeing here. It's been in that downwardly trend. It was sliding for days and days and days, a couple weeks. At the same time, we're in weekly buys. It refuses to give the longer-term trend a change. So all you could do is basically hedge yourself of the downside unless you're doing binaries or options. Jumped into the daily buy right there. I thought, okay, maybe they're going to bottom it out. Now, we know that the Chinese market is taking it on the chin because we've done webinars here explaining that the government stimulus is way, way, way too small. Just way too small. It should have been, I don't know, somewhere in the 20s to almost, say, 27, 28 trillion yuan. And all they did is did a 1 trillion yuan. And so it's more of a sugar high. And you can see they did lift it up yesterday or last night, going into the close of the week. Let's show you that. There's the Shanghai index. And you can see the algorithm's trying to turn up at the same time. That was yesterday's right there, I believe. Let's refresh that. So it went into the daily buy yesterday. Yeah, there's the 17th, and today's the 18th. So there's the 18th. And we can go like this, and our private platform that we let clients use is very physically interactive. You can see how you can adjust it like that, and you can see here it went into the buy yesterday there, and it lifted. Now the problem is that we're cleanly through the weekly sell, so we don't really trust that buy that much. In other words, we think the odds are it's going to go down, and so we knew some strength was coming. If you're short in there, obviously you had the opportunity to protect your short. And if you're very nimble, you found a way to play the long without taking much risk, because we are in going to be closing in a weekly sell right there. You can see that pressure on it. And you can see this is where they came in. I think they did the cut right here. Or I guess where was it? Right here. They did the cut right there. Right before they went into the holiday. That's what it was. It was right here. That Friday they did the cut, or Thursday, right around there, and they put out 1 trillion yuan, or about $156 billion, to perk up their economy, and it took off. It did. It was a good move, but you can see they were front running it. Our math picked that up. They've been front running it since like early September or mid-September, let's say, right there, 10 days earlier, and we were in weekly buys. They were front running the whole thing, and the moment that they did it. It pushed itself right into the sell. You can see right there. And so you can see the pressure has been on this product. Now remember, they closed, so their charts are a little funky because they closed on, for the lunar holiday over there. They closed like they traded on Friday. of the 30th or the 27th, and then Monday they traded, and then they were closed all the way throughout the whole week. I think they opened up on Friday, and then they closed again the following Monday, and then I think Tuesday. So they lost like a week and change basically of trading. So the charts reflect it. You can see it goes like 10th, and then it jumps to 14th from the 10th, and then you can see here it goes 27th, 30th, and then it goes to the 8th. See that? That's because of the holiday. So the sugar high, that's what we call that. At least I call it the sugar high, because the stimulus is just not big enough. And so when we go back and we look at what we were looking at the copper. We were looking at copper on the other screen on the old platform right there. Copper has been trying to, they knew that the sugar high was coming. So they front-runned, because copper is like the gold of China, because of all the construction in the ghost cities, and they knock them down and they put them back up again, and they knock them down. They use a lot of copper. Let's put it that way. All right. So from there, where do we go from there? We go over to what do we do? We go. Let's see if we can get rid of the calendar. So then from there we go over to we look at platinum. That's what it is. We go to the platinum. Platinum had an odd move there yesterday. We call this the world's most dangerous short. It's only because it's trading almost a third of what gold is. Now it's up to 1,000, so that's cool. But last week we were at 950 when gold was at 2,700. It's like, it was a third. But when you try to physically buy the stuff itself, they trade it like it's same price as gold all the time. You go to a jewelry store, you're going to find it. It's very hard to get physical platinum. Platinum must be silver, and platinum must be the hedge for gold. So in other words, institutions that are buying gold are obviously shorting platinum, and they're shorting silver against it. Hence why they're not at all-time highs. I mean, obviously, if they weren't shorting it and selling it hard, they'd be at all-time highs right along with gold. And 56 versus 32, that's $24 off its all-time high. That's a lot. That's you're talking in the low 40s, high 30% off. That's pretty ugly. Platinum, same thing. Platinum, I think its all-time high is like 2,100. The thing is trading at 1,000. It's 50% off its all-time high. Something's wrong there. Obviously, it's the games that the central banks play. Remember, the hedge funds and the mutual funds and the retirement funds are incorporated, and they have an incorporation manifesto. When you incorporate, you have to try to explain what your company is going to do. And in the case of being a fund or a hedge fund or a mutual fund or a retirement fund or a mutual fund, any of these things, they incorporate, and they have to put a manifesto in there saying how they're going to invest. And then they always caveat it with a little black magic, a little Harry Potter magic there. Good magic, not bad magic. They say stuff like, and then we'll pay attention to the price of gold, and we'll look at the price of silver, and look at inflation. They always put those caveats in there about how they're going to be paying attention to those things. And if those things change their complexion, the way they're moving, we will do X, Y, or Z. We may lighten up on our equity stocks. We may reach for consumer stocks. Things like that. They put that into some of these hedge funds so that they can hold the money managers to a way of measuring them, understanding how they're investing, so that they know when they start doing things wrong, then they've kind of like, they went a little crazy in the head or something, and then they sue them or they get out of the fund, one or the other. So in this case here, we have to assume, looking at platinum and silver, that money managers have been selling it short to match up against their long gold. And this way they don't have to liquidate their stock positions as much. And so, we believe it's part of the incorporation manifesto in a lot of these companies because they're all pretty much cookie cutter. They all kind of look about the same. They have some soft ways of trying to make it look like they're independent or in unique individual. Like, this is our proprietary tool. We're not going to explain what it is, but we will use it at times. Things like that. And so when we look at platinum, I think to myself, you got to be insane to want to be short that thing with gold at 2,700, because you got to assume that there is going to be a recoil of it at one point or another. And so that's where we go from there. Now, from there, we go over to the beta platform. Our beta platform is right there again and has our math on it. And we'll put that up there. Where's that? Right there. And we'll go take a look at the energy sector. So there is crude oil right there. And you can see crude, battling still in a weekly buy for 3 weeks. And you see it's topped out this week, and and we've been in the sell for 4 days here now. And and at the same time we're in a weekly buy. So we're kind of like in a neutral stance at the moment. What else can we say about that? Just the fact that the product, is trapped in the low 70s. Where's it trading right now? It's trading at 70.15 with a low of 70.13. So I mean, it's right there. Same thing with Brent. Brent and West Texas Intermediate follow each other, and the only difference is the cost of delivery or moving it. And one is more of a platform, and the other is trucks and dirt. On the land. Not that they do use platforms out in the Gulf and so forth, but overall the bulk of it is coming from land, whereas the bulk of Brent is coming from Brent Sea. All right, let's put that up on the screen here. BR, where are you, BR? It'll jump out in a second. I am starting to write the names into things like coffee, cocoa, FTSE MB, Jakarta, Saudi Arabian oil. I'm starting to put the names in there so it's easier to find. It'd be easier to look for Brent, BREN, versus, or it's BZ, I guess it is. Brent is BZ. I always get it confused there. Is that right? Yeah, there it is. So Brent right now is trading, let's just move this over. I think it's in the 73s there. Yeah, you can see it's 73.86. Actually, it's at the low of the day right now. And you can see here, 4 days in a sell, and also just like West Texas, 3 weeks in a buy. So they're kind of like trapped or stalled, no real conviction, as we would say on the trading floor. From there, we go over to, we look at heating oil, or I guess you could call it, it's in New York, they call it, what is it? I think they name it after. You see what it is. It's odd, but it's heating oil. What it is it's the refined fuel for the airplanes in the sky and the trucks that move most of the goods. And not there, nope, wrong one. And and it heats houses here in the States. So we call it heating oil, when in fact the bulk of it is used to, fly airplanes, 727s and so forth, or Piper Cubs, or basically trucks, diesel machines, that type of thing. And so in New York at the exchange, they call it the harbor fuel, ULSD, New York Harbor Fuel. And so it heats houses, it heats basically heats up engines. That's the way it goes. All right, and then from there, where do we go from there? We go to over to, what did I do? I lost myself here. Let me just get the chat line back up. I accidentally hit a button and hit the wrong thing there. There we go. There's the chat line. Okay. So from heating oil, you can see that it's trying to go into the sell also, but it seems to be following the underlying product of crude itself. And it's in the sell from here. It wasn't a good sell from up in here. I mean, it fell from the 62, 65 area down to as low as 15. So in the sell until it went back into the buy again, and you can see we got the bounce out of it. From there, we jump over to natural gas. There's natural gas. Natural gas is starting to feel some pain. It's going into a weekly sell. It's been in a daily sell for, I don't know, 10 days, 11 days, something like that, from the top up around the $3 area. And now we're trading at the, where is it, $2.31. So it's 69 cents down. You can see the weekly right there is, down at the bottom of the algorithm there. Let's see what the mouse is showing that right there. You can see it's making it blink. And so you can see right there it's showing us that there's pressure on it. So that is really, the name of the game, what's going on there when it comes to the energy sector. Now we look at it, we follow an energy stock in Spain. We've followed a couple of them at times just to try to get a flavor of what's going on in Europe about the costs. When stocks go down, obviously they're making less money on, they're selling less of their product. So let's just show you the energy company in Spain today that does natural gas right there. And you can see this thing's been in a weekly sell for 5 weeks. This thing's been pushing down and down and down, since up around the 14 and a quarter area, and it's gotten as low as 13 and a quarter basically. So it's dropped $1. You can see a little bouncing, kicking up the last 3 days. But overall, that's probably more because of the time of the year. It's we are going into the colder months. I'm just answering somebody. Good. Let's see, what is that? Choose an input. I don't want an input. There it is. It's going like that. So that is really the best part about all this energy right now, is that we're seeing lower prices in energy, which going into the wintertime is a very good thing. Let's see. Let me just fix that. Communicate. Let's see, let me just communicate. So, all right, I just sent out that text. So there we go with the energies. And what we'll do is the last few minutes here, we have about 2.5 minutes. I got to figure out a title for this thing too. We'll take a look at some of the world indices that we usually look around at. We showed you Shanghai. Let's see what Tokyo did last night. We saw, the currency's moving up, so it's more of a currency play probably, why the stocks are moving. In this case here, you can see, it's been a little weak, and it's sliding into a weekly sell as we speak also right there. So there's a little pressure there. I mean, when the currency's trading at 150, it's putting pressure on, that's inflation basically. So let me think, what else can we say? Oh, I know what it is. I want to put my title up on here. Let me let me just throw that out there. What is the title for today? I guess what we're going to is we talked about fundamentals and so forth, like fundamentals versus our technical or algos. And so I think we'll just leave it at that. I think that was because that's pretty much the gist of the day. I was by explaining to JI that how we look at things. So that was good. That we're able to express the way we read things and help people to understand what we're doing. Let's see. So title today: algorithm versus fundamentals. There you go. So that's our title today. All right, what else can we say? Oh, let's take a look at a couple. We got about a minute and a half, so let's go take a look at a couple of. Let's see. We'll go like this. We've seen Shanghai and Tokyo. Let's see Singapore. There's Singapore coming up on the screen. You'll be able to see how it's coming out of the week. It looks like it's trying to climb into the buy here. So it closed in the buy. There's Singapore, and it's been rising again. It's at its higher end of the range for the last 6 months. Let's take a look at the Nifty 50 in India. And then we'll go around the world. We'll take a look at the DAX and the FTSE and make a run for it since we're running out of time. You see 3 weeks in a sell on the Nifty, and it's off its highs. You can see a lot of daily sells right there. Let's see what the DAX looks like today. Let's see, DAX. There it is right there. You see the DAX trying to lift up today and still in a weekly buy for the 4th week now. See, FTSE was showing a lot of life too. And I mean, obviously they've lowered the interest rate, so it gives room for some stock buying. So, I mean, that's kind of the way. Right there's the FTSE. And you can see, it's been in a daily buy for about 6 days now. And it's the second, 4 weeks in a weekly buy. So they're not running away from this stuff. A lot of people are saying that the markets are rallying because they believe Mr. Trump is going to win. So that's what some money managers keep on saying. So we'll see. All right, this is Doc. Everybody have a safe and smart weekend. We'll catch you all on Monday, same time, same channel. So TGIF to TGIM. Thank goodness it's Friday. And thank goodness it will be Monday. We're traders. All right. Happy trails to you until we meet again. Happy trails to you. That'll be Monday. Happy trails to you, to all our Dukascopy friends. Later, traders. Have a safe and smart weekend. Ta-ta for now.